you get a read on this Friday's impending non-farm payroll report, the single most important piece of data we get each month? I always like to hear from Paychex. Paychex, second largest payroll processor in America, specializes in serving small and medium-sized businesses. Despite the falling unemployment rate and incredibly high levels of business confidence, Paychex stock has been basically flat for the year. Maybe the company's finally going to get the credit it deserves, though. This morning, the company delivered a nice 2-cent earnings beat on roughly in-line revenue. Company, but more importantly, raised its full-year revenue target and gave us some positive commentary about the next few quarters. Stock shot up $2.18 to 3.6% today, but could this simply be the beginning of a larger long-term trend, given the fact that there's so few analysts who recommend the stock? Let's take a closer look with Marty Mucci, the president and CEO of Paychex. Find out more about the quarter and where his company's headed. Mr. Mucci, welcome back to Mad Money.
Thanks, Jim. Good to be here.
Okay, Marty, you had some subdued comments overall about small business growing, and we can take a look in a moment about a chart. And yet you really raised guidance, plus you're also building a brand new office. I mean, it sounds like things are pretty bullish. Can you explain to our viewers the dichotomy between how you don't see the small business index accelerating, but you see your own business accelerating?
Yeah, I think what we see in small business is a moderation of the growth, but consistent. So we're growing very consistently in small business job growth right now. And we're seeing wages up, which is a very good thing, obviously, for buying for the consumer, those employees buying more. And I think that's going to add to business confidence. And you see from the company side, our HR outsourcing is one of the fastest growing segments of our business. And that's adding more to the clients that we already have. So good business growth, moderate but steady, and selling more services to the clients that we have.
All right, how much of the forecast up has to do with acquisitions? Because I want to try to break it down to organic growth that's better than expected and purchase growth, which may not be as important.
Yeah, I think the organic growth, we saw a little bit of an uptick in the forecast. But we did just do the acquisition of HROI, HR Outsourcing, which is a PEO company, an HR outsourcing company. And that is certainly helping add to our guidance for the year. And we continue to look at other acquisitions as well and other opportunities to grow our scale. We're one of the largest HR outsourcers of small and mid-sized businesses, and we want to continue to keep that market leadership.
You know, Marty, I was looking at your margins versus the margins of Automatic Data, which does large. And I noticed your margins are appreciably better. What would happen if you just kind of went in and got, say, 10 very large clients? You can afford to have some margin degradation and still be able to take a lot of share from Automatic Data.
Well, I think so, and I think we're doing very well in that mid-market space, the larger clients, because of the offerings that we have, very wide breadth of offerings in our technology and our service levels. But, you know, the margins are strong because we keep expense out of the business. We've never really let it in. Few layers of management. And we really make sure that our process is very tight as far as how fast we can onboard clients and then service them.
But it also seems that you're ahead of them in terms of technology spending. You kind of figured it out that it's going toward the cell phone a little ahead of they did. And that's obviously a great edge for you versus them.
Well, I think we've done very well. We started 7 or 8 years ago realizing that we had to invest a lot more in technology. We reduced our costs in the operations side and invested all those dollars in technology. We're a mobile-first design where we design everything for the phone first and then expand it as you're on the desktop. And we do everything in an agile development. So we bring products to the market faster than we ever have. And we feel very good about the technology that we offer our clients.
Now, you do offer high-touch business, but you also offer the online business. Is online very profitable for Paychex?
Yes, it is, Jim, because and we're seeing more and more growth that way. We're developing it that way to be profitable. And it's really, you know, when you're letting the client do more because they want to do more, that can be very profitable. And we also, you know, we've always been very profitable, even the high touch. And if you want to come to us, that's fine. If next week you want to do it online, when you want to do it, you know, that's fine with us, too. We try to make it any way the client wants to do it.
Okay, so where in the country are we seeing good, accelerating job growth? Because you already said it's steady. But where's there accelerating? Yeah. And what is your prediction for what will happen in both Houston and Florida as the cleanup goes on?
Yeah, I think, you know, certainly our thoughts and prayers go out to all the folks there in the recovery mode now. And we feel that for Houston and Florida, what you'll see is probably for the next month or so, we'll see businesses down. The hours worked we saw drop dramatically, obviously. But then typically, depending on whether those businesses can come back or not, but we think they will, you'll see an uptick, frankly, in small business as landscapers and roofers and all of those contractors come into those areas to help them recover. So we really think that that'll probably offset the downsizing of some of the businesses. And we hope that the damage wasn't enough, particularly in Florida, that those businesses will come back.
Yeah, I think they will, too. Well, anyway, you've been a great barometer. And I think you taught some of the people who've been saying sell the stock a lesson today. It's a lesson they better start learning soon. Marty Musie's the president and CEO of Paychex. Congratulations, sir, on a great quarter.
Thanks, Jim.
Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.